Hello and welcome to the launch of Climate League 2030. Thank you for joining us. My name is Emma Hurd and I am the Chief Executive Officer of the Investor Group on Climate Change. I would like to start by acknowledging the traditional owners of the land from which I'm joining you today, the Gadigal people of the Eora Nation, and pay my respects to elders past, present and emerging. And I would like to pay my respects to the traditional owners of the lands from which you are also joining us here today. It gives me great pleasure to be hosting today's launch of the Climate League 2030, a new 10-year private sector focused initiative to help Australia reduce our annual emissions by at least a further 230 million tonnes from business as usual in 2030. We have developed this campaign because we think it is a responsible response to the financial risks posed by climate change, and because reducing our emissions will help Australia secure a healthy economy. We know that intensifying extreme weather events like the bushfires, heat waves and drought are increasingly threatening our homes and infrastructure, stretching recovery budgets and threatening cash flows and the value of physical assets. The shift in global financial markets, technology costs and the policies of our major trading partners creates transitional and stranded asset risks for Australia's emissions-intensive economy. At the same time, we know that there are significant economic opportunities for Australia in the inevitable transition to net zero emissions. Responding to the risks and pursuing these opportunities is responsible economic management. Over the next hour, we'll be sharing with you why we have launched a new 10-year campaign to reduce Australia's greenhouse gas emissions, how it will work and what we aim to achieve. You'll be hearing from a few of the organisations involved on why they are supporting Climate League 2030, and we will discuss what actions they will be initially taking. And we will be letting you know how you can get involved. So first up, we've prepared a short video to let you know more about Climate League 2030. This will be followed by some opening remarks from Stephen Dunn. Stephen is our chair of the IGCC Management Committee. Many of you will also know Stephen from his various roles as a director and chair of the Investment Committee with Seabus Super, as a director with QIC, and through his many business and investment roles over a number of years with some of Australia's largest organisations. After which, I'll be back to go through in more detail the mechanics of Climate League 2030, how to pledge support for a shared commitment to reducing emissions by at least 230 million tonnes by 2030, what participants and supporters are required to do, how we'll track progress and who is involved so far. I will then be joined by Deanne Stewart, CEO of Aware Super, Christian Fock, CIO of Seabus Super, and Chris Newton, Executive Director Responsible Investment at IFM Investors, for a discussion on their approach to climate change and why they are supporting Climate League 2030. And we would welcome your questions at that point as we discuss the challenges and the opportunities for Australia in transitioning to a net zero emissions economy. So let's get into it for the launch of Climate League 2030.
Good afternoon. My name is Stephen Dunn and I am Chair of the Investor Group on Climate Change. I'd like to add my welcome to Emma's to this very important and milestone event, the launch of Climate League 2030, a collective 10-year journey to actually bend the curve on Australia's greenhouse gas emissions. As long-term investors, you know that climate change represents a very significant investment risk to our ability to generate long-term, attractive investment returns for our clients and members. You know that climate change is a systemic risk, a risk impacting all parts of the Australian economy. And as investors in Australian companies, in Australian property, in Australian infrastructure, and Australian debt, climate change impacts all parts of our portfolio. And you know that climate risk is accumulating risk. The longer we delay, the more significant the risk and the more significant the impact will be upon our portfolios. We also know it's not just up to the governments of the day to address climate risk. Investors, companies, lenders, and insurers must work together to collectively reduce our carbon emissions in line with Paris targets. This is why we're launching Climate League 2030. Climate League 2030 will create a powerful network of investors, companies, insurers and banks coming together as equals to bend the curve on Australia's carbon emissions, knowing that we collectively can achieve much more than each of us can do separately. A network for sharing information, honest and open conversations, and for truth-telling about the task at hand. Climate League 2030 will create a platform for learning from each other, sharing our experiences, what's working and what's not working. Climate risk and tackling climate change is an immensely complex task. Mistakes are being made and mistakes will continue to be made. But if we can learn from each other with regards to our mistakes, discuss alternative pathways forward, then collectively we will get there more quickly. Climate League 2030 starts today, right here, right now. I look forward to embarking upon this 10-year journey with you. Back to you, Emma.
So now I'd like to take a little bit of time to go through Climate League 2030 in more detail. And really what I want to do is go through why we've made some of the decisions around key elements of the campaign, how it's going to work in reality and over the next 10 years, who are the organisations that are actually supporting the initiative to start with, and then how you can get involved in joining up to Climate League 2030 as well. And to do that, I'm going to walk through some slides and provide you with a little bit more detail as to the core components of the actual campaign. So let me start by asking and talking through what it is that we're actually trying to do, the core element of the campaign, which is the 230 by 2030. And really what I want to do is start by actually just talking through a little bit about the initiative as a whole in terms of what it is we're trying to accomplish. So we know that we have 10 years in which to substantially make a difference on climate change. We know that we need to dramatically reduce Australia's greenhouse gas emissions. We know that the science tells us that 230 million tonnes is the key component which we should really be targeting. And we know that by 2030 we need to be well on our way to transitioning to a climate resilient net zero emissions economy. So when we looked at the science and we looked at what do we need to do to be making that transition to a net zero emissions economy, we really began to focus in on this question of what's the number we're trying to target, what it is that we're trying to achieve. So we looked at the core agreement which frames all of our action on climate change, which is the Paris Agreement. The Paris Agreement tells us that, and we have signed up to as a country, the commitment to keep global warming to less than 2 degrees and to preferably to keep it to 1.5 degrees of global warming above pre-industrial levels. So this means for Australia, if we listen to the scientists, if we listen to the experts from organisations like the IPCC, or in Australia's case, the Climate Change Authority, we know that we have to be targeting at least a goal of 45% reduction in our national greenhouse gas emissions by 2030. This, when you translate it back to actual hard numbers, means at least 230 million tonnes we have to take out of our BAU annual greenhouse gas emissions by 2030. But we also know that currently we are not on track to achieve the goals that we have set ourselves under the Paris Agreement. So we really need to step up as a country. We need to step up in terms of our ambition, and we have 10 years in which we can really substantively make a difference in terms of our ability to hit that goal of keeping global warming to less than 2 degrees and to get even close to keeping it to less than 1.5 degrees. So 10 years is the framework we've set. 230 million tonnes by 2030 is the goal that we're hoping to achieve. So if we're starting with that in terms of our goal, that's the commitment that we're asking supporters to pledge to. What is this campaign actually going to look like? How is it actually going to operate? So what we've decided is that what we really need to help all of us accelerate our action to get closer to the ambition we need to achieve, we need to sort of set up a platform for action. So signatories who come on to Climate League 2030 take a pledge, they commit to supporting that goal of 230 by 2030. And then through Climate League 2030, they begin to catalogue and track and report on the actions that they're taking across 3 key areas. What we're asking Climate League 2030 supporters to do is to take action in terms of how they're integrating Paris-aligned emission reduction goals into their organisation's investment strategy or their business strategy. We're asking organisations to collaborate with companies that they invest in and to partner with other organisations to deliver greater and more sustained emission reductions over time. And we're also asking signatories to invest in line with the goals of the Paris Agreement. For investors, that obviously means capital allocation. For banks, it's lending, but it also means for companies in terms of investing in solutions and technology changes, in the kinds of changes that we know we need to make in order to make substantive progress towards that goal of 230 by 2030. We're also going to be really tracking progress against our goal because, as we all know, what gets measured gets managed. And that includes even an initiative where we are seeking to contribute to a national goal of 230 by 2030. So what we're aiming to do is to ask all of the signatories to report at least 1 action per year, hopefully more, through the website that we've set up as the platform for action, www.climateleague.org.au. We're looking to collectively report on the impact that the initiative as a whole is making every year, to be transparent around the impact that we are having through this campaign, and to come up with some innovative ways of tracking progress and tracking the commitment that the private sector is making to our national goal of reducing greenhouse gas emissions in line with the Paris Agreement. And we're also insisting really that signatories have to commit that 1 action per year for this initiative to be credible. If signatories are not taking action in line with this goal, then we do reserve the right to quietly ask you to come back when you actually are making significant contributions towards this goal. This ambition commitment only works if we all take action to work towards achieving this goal. And so who's actually involved? Well, let me start by particularly acknowledging our foundational supporters. These are the organisations who have provided us with additional support to actually get Climate League 2030 up off the ground, to build the infrastructure for it. And of course, for this I'm talking about Aware Super, Seabus Super and IFM investors. But also I wanted to thank all of the organisations who've come on board at this early stage in terms of launching the campaign today as supporting signatories to the initiative who'll be tracking their actions and reporting on progress over the next 10 years. And here's a selection of some of the key supporters who've come on board. And I think you'll agree it's a pretty impressive lineup of organisations that vary quite substantively in terms of size, in terms of focus, in terms of their organisations and their operations as well. All of these organisations have pledged to support that goal of 230 by 2030 and to take action to support Australia reducing its greenhouse gas emissions. We're hoping to add to this list, and if you don't see your organisational logo on this slide, then please come and talk to us, because we will definitely be coming to talk to you in terms of building out the supporters on this campaign this year, next year and every year for the next 10 years out to 2030. But this is an initiative where we're looking to partner with a range of organisations beyond the initial supporters for the campaign. This is an initiative whose ambition can only really be achieved through collaboration, not just in terms of the signatories, but across the economy as we work towards this goal. So we're launching it today with investors, but we're really going to be immediately looking to partner with our colleagues across the rest of the financial sector. So we'll be coming to talk to banks and insurers and, of course, other investors to ask you to also join Climate League 2030. Once we've done that, we'll also be looking to expand the initiative out to companies across the rest of the economy, because we know that collaboration is how you achieve ambition. We know that capital has to be invested in solutions, and companies in the private sector really has to come forward with technological, with process type solutions to actually achieve these kinds of substantive emission reduction goals. We're also going to be partnering with other organisations as we scale up the ambition of Climate League 2030 over the next decade. Looking to work with different organisations who focus on different elements of the Australian economy, or who are also working towards this shared goal of helping Australia to reduce its national greenhouse gas emissions. And in particular, as we look to develop the progress report, we'll be looking to partner with a number of different analytics and data services companies to build up a really impactful and innovative measurement and reporting framework to begin to be able to track and show how we are achieving impact through this initiative as well. Because impact is ultimately what this initiative is all about. So collaborating with the signatories, but also collaborating with the whole ecosystem of organisations who are focused on achieving substantive emission reduction goals across Australia. And so I guess lastly, it just leaves me to say that we know that this is the beginning of a 10-year journey. We are very focused in terms of developing up this initiative over the next 10 years. And we know that in many ways, it's all about the actions that investors are taking in this first stage, but ultimately the actions that banks and insurers and companies right across the economy will be taking that will help the private sector contribute towards the Australia's national goal of reducing greenhouse gas emissions by 230 million tonnes by 2030. So to help us understand a little bit more about what real-world actions the supporters of Climate League 2030 are going to take, we're now joined by a great panel of investor representatives to talk a little bit more about the actions they're taking, what motivated them to get involved, and some of the risks and opportunities they see from reducing emissions in Australia. So let me introduce the panel. First of all, we have Deanne Stewart, who's the CEO of Aware Super, one of Australia's largest funds managing over 120 billion in funds under management. We also have Christian Falk, who's the Chief Investment Officer of Seabus. And Christian's team are responsible for designing, setting and implementing the investment strategy across the fund. And thirdly, we've also got Chris Newton, who's the Executive Director Responsible Investment at IFM Investors. And Chris also works across the investment team to ensure that responsible investment considerations are embedded in the full investment and asset management and reporting approach and frameworks at IFM. So welcome, everyone. So I guess I want to start with understanding a little bit more from all of you on the approach that each of your organisations are taking to climate change. So perhaps, Deanne, if I might start with you, just wondering if you could just give us a quick overview in terms of the strategy that Aware has put in place in terms of dealing with climate change.
Wonderful. Thanks, Emma, and really pleased to be here today. Certainly there's a number of actions that we're taking, and the reason for this is that we do see climate change as one of the greatest risks in our investment portfolio, but also a real area of opportunity. So the number of actions that we're taking, we've actually put together under a whole climate change transition plan. And the first action that we've taken is really to divest from thermal coal. Why? Because we don't see from an investor's perspective the value in that going forward, and we see it much higher risk in terms of being a stranded asset. So that's the first thing. Secondly, in the short to medium term, we're looking at transitioning our listed equity portfolio over the next 3 years, reduce the carbon emissions in that by 30%. The third aspect to our plan, which really ties up with the Climate League 2030, is really to get behind this 45% reduction by within the next decade and really mirror that in our own portfolio. Then we're also setting a net zero by 2050. And then finally, really looking at the opportunity side and really looking to invest significantly in renewables and emerging technologies. And we see that collective action not only will help protect our members, but also provide sustainable and strong returns, not just for today, but into the medium term and long term.
Yeah, great. A lot of different elements there, which I think we'll come back to in terms of the discussion. But Christian, let me jump to you in terms of Seabus's approach to climate change And I just wonder if you could give us an overview of the climate change strategy that Seabus has also announced.
Thanks, Emma. I think maybe just for those that are watching, it's probably useful to say that this has been a journey that we've been on for multiple years, and one where as we look deeper and deeper into the issue, we see more and more opportunity and have become more and more ambitious. So it started off by really sort of putting out a position statement, sort of just stating the facts around that we're aware that climate change is occurring. It has impacts on the portfolio, both positive and negative, and it's preferable that we deal with the transition to a low carbon economy in a more measured way rather than an abrupt way. We drew insight from a lot of success that we had from our property side of things. So Seabus Property is a development company of ours. They have committed to net zero targets for their portfolio, and we've extended that to our whole property portfolio by 2030. This was a great example where we could see that we could be even more ambitious in a subsector than maybe the Paris Agreement and requirements are needed, because the environment sort of suited it, and we're able to do this in a way which generated really strong returns for our members. We took that ambition and then said, okay, well, we need to think about the whole portfolio. And the insight around all the commitments that are being made globally, through each of Australia's states and territories and through corporates, means that the investment case to be looking at this holistically is quite compelling. So that led us to integrate targets with our whole portfolio that aligns with Paris requirements. So we've recently announced the net zero ambition for 2030 and a 45% reduction for 2030. We're now going through the process of tracking how we're going to achieve it through each of our sectors. It'll be different levels of pace and so forth that we think we can do, but holistically we think it's not only achievable, but we think that it gives us a front running around making sure the portfolio is future-proofed. Thanks.
Yeah, great. And Chris, also just jumping to you, because I know that IFM has also just very recently made a new climate change statement and a new commitment. So wondering if you could just take a few moments to tell us about IFM's new climate strategy.
Yeah, thanks, Emma, and hello to everyone on the call as well. It's interesting, yet we've been really excited to join Climate League 2030, but also excited to announce our ambition for a net zero target by 2050 as well, just this week. But interestingly, our journey on climate change started a few years back, actually, really around, understanding, I guess, the risks of climate change, knowing that ultimately, as you had mentioned before, Emma, climate change is systemic. It is actually going to impact other investments, no matter what asset class we're involved in, and equally what market we're operating in. So we started with that measuring aspect, understanding the risks that were there, and then actively managing what we were measuring. So infrastructure was a critical part of our journey, like property was with Seabus. Infrastructure was really critical because we have significant influence over the investments that we've made, both here in Australia and around the world. So we focused in on that. Last year, we were really excited to, actually it might have been the year before even as well, excited to actually announce part of our emission reduction strategy on the Australian infrastructure. And now we're rolling that out globally in terms of setting tangible targets. And that's, I guess, what we're so excited about Climate League 2030 as well, is because it is tangible. It's focused on actions. As you said, it's about every year making an extra commitment and an extra movement towards the 2030 goal and the 2050 goal, importantly, and contributing to Australia's reduction. And as Deanne and Christian both said, the aspect of collaboration is really important. We know that, one single initiative, although very important, is isolated. And by working with other people, other organisations, both listed and unlisted entities, other shareholders who have aligned values and aligned vision, we'll get there. It's not going to be easy to transition many of these investments that we've made globally, but we're up for the challenge, as many of you are that are on this call as well. Thanks, Emma.
Yeah, great. Thanks, Chris. And it's interesting, actually, in terms of hearing from all three of you, there seems to be some common themes coming through in terms of the importance of setting goals and targets, the importance of looking at where you can have the impact across the portfolio, the focus on the transition, but also that recognition that this is a longer term journey and that it requires iteration and adjustment over time. Deanna, I wonder if I could just jump to you, because I know that's something that you also mentioned in terms of the opportunities side, and looking at the risk component is really important, but also beginning to look at how do we scale up investment in opportunities. And so I wonder if in terms of thinking about your fund approach, where are you seeing some of those opportunities really coming through? Or are there particular areas where you think there's a lot of opportunity for Australia in terms of achieving emission reductions?
Yeah, thanks, Emma. There's a number of opportunities that are really going to present, and certainly that we're seeing. And they're not just what I'd say in the most obvious space from a renewables perspective. So I'll probably touch on a few different areas, because I think it's the collective that will actually help achieve these goals that we're looking to set. So first of all, clearly in renewables. So for example, over the last year, we've been a significant investor in wind farms, for example. So that's certainly an area that we're looking at and would look to invest more where we see value. But certainly some of the emerging technologies. So just recently, for example, we've invested in a couple of companies that are really around battery storage. And we see this certainly as a significant trend and investment opportunity over the next 5 to 10 years. And hopefully we see more in the hydrogen space emerging through this next decade as well. So they're areas that I think certainly are either obvious and or emerging. But I'd also say that there are many other areas as well from an investment perspective. So take transport, for example. So the electrifying of transport, which is also a critical element to really dropping carbon emissions. So, for example, we are one of the major investors behind the Sydney Light Rail, as an example, that will certainly assist from that perspective, but also even the materials of the light rail are 98% recyclable. So it's just that mindset will be the next area. Then the third area, which Chris already mentioned, is really around building and construction. So if we look at some of our property investments, for example, or our real estate, by actually adding things like solar on all our retirement villages, not only does that really help from an environment perspective, help from a carbon emissions, but actually it makes it more affordable for retirees as well. So there's several opportunities there, and then makes it a more attractive place where retirees want to be. So there's many opportunities right throughout your portfolio to look at in terms of really looking to reduce emissions.
Yeah. Christian, you also mentioned property. Obviously, Seabus has got a lot of work in property, building and construction. I know that you've also looked at setting some targets around how to increase investment into the low carbon opportunities as well. I mean, where are you seeing across your portfolio some of those real opportunities to reduce emissions in Australia coming through?
Yeah, well, I think I'll make the point that the transition is an economy-wide transition. So as investors, we're actually invested right across the economy. So I think, and I certainly agree with Deanne, this is a much broader lens that we should be looking at. But the benefit of that is then it really broadens the universe of opportunities as well. And I'll give you an example. So as part of what we were doing with our property portfolio, amongst other things, including energy efficiency, introducing new technology into the buildings, which helps make them more attractive from a wellness and a place to work perspective. One of the things that we joined in with was with an initiative with the Melbourne City Council around sourcing in larger scale renewable energy. Now, this act of corporate Australia, or in our case, our businesses through property, in sourcing a particular type of energy, which is clean energy, really addresses one of the fundamental issues that I think we have in the transition is if we want to introduce solutions, we need some kind of consumer demand for it, scale, and the technology to be available. And in many cases, we've got the technology, but we may not necessarily have the scale or the demand. So there are really interesting areas that we can look at just within the assets that we own. I think the other thing is understanding where the trends are going and thinking about how you make sure you build the option in the way you design or invest in assets along the way is really important. So another example is that when we design a building, it actually takes probably 4 or 5 years to go from design, getting approvals, sales, and completion. Now, 5 years is a very long time when it comes to technology disruption and consumer preference changes. So for us, again, understanding what's coming down the pike, not necessarily being constrained that it's not economic now, but having the optionality to retrofit will be really important. Thanks.
Yeah, I mean, I think that's an interesting point to make. I mean, in terms of thinking ahead, anticipating the technology changes, anticipating also how some of these technological solutions will layer up to deliver some of these outcomes as well, alongside behavioural change, is really kind of, it feels like very much the next wave in substantial transition that we need to make across the economy as well. Chris, I'm just jumping to you in terms of how that works from an infrastructure perspective as well. I mean, we've mentioned renewables, we've mentioned property, we've mentioned input materials, we've mentioned how these things all come together. But what about when you've got an existing portfolio of assets? Like, where are the emission reduction opportunities in terms of not just looking ahead for new acquisitions or new investments, but also in terms of transitioning what you've got?
Yeah, it's a great point, actually. I mean, I was sort of listening to Christian obviously talk then around the 5-year period for property development. And remember, for infrastructure, of course, the investments or the infrastructure that we use day to day from a road, airport, port, seaport, etc., they're built for decades. And so we've got to look a long way into the advance. And that aspect of transitioning them is actually really critical. Where do you get the most from those assets right today? And picking up on those things, it is renewables, the behind the meter, and we've been very lucky in the sense of, and smart in many senses of investing now, and even in the middle of the COVID period. One of our investments at Melbourne Airport has put through the 12.7 megawatt solar facility behind the meter. So behind the meter is actually a really big part of our equation to reduce emissions. It actually is really commercial as well. It actually is a really good rate of return for us too, which is fabulous, because ultimately, we're focused on the 2050 and being ready for the future, but ultimately as well, we've got to act in the best interests of our investors and their members as well, and protect and grow their investment returns. So that's important for us. The other elements where it's coming through, and it's a little bit not as sexy as having lots of solar panels or wind turbines, but around the efficient use of the infrastructure itself. LED lighting is pretty simple from one perspective, but also actually smart technology starting to come in about, utilising things like air conditioners at rather large facilities like airports, and monitoring time of day, monitoring customer movements, and to adjust accordingly. So we're starting to see a lot of that come into that efficient asset management actually is leading into reductions. So there's a whole range of different things that we're looking at, but really that behind the meter and energy efficiency are the two levers that we've seen over the last 2 years in particular to really drive good outcomes in emission reduction. I expect that will happen over the next few years as well. Thanks.
Deanne, it sounds like you were also agreeing there in terms of the opportunities for lots of small things as well as the big things in terms of achieving change.
Absolutely. And I think the things that Chris was mentioning, apart from calling our portfolio quite sexy, which I had never thought of or heard of before, but I'll take that. It is a combination of some of these bigger things and a whole bunch of small things. But I think Chris's point was that actually it is the combination of the two that will really help, but also that it's with that mindset of what will provide the best possible returns for our members, and actually getting as efficient as possible is an example of that.
Actually, it's interesting you should mention that, because one of the things that came up in the recent federal budget in Australia was this kind of re-emergence of the discussion around the role of investors in tackling some of these big environmental and social challenges, and particularly in terms of how it relates to the sole purpose test and core fiduciary duties to deliver returns. I mean, how do you see the need to manage climate change in the context of those discussions around those core responsibilities, particularly for investors?
It's a great question, and I think
and then maybe Chris as well. Yeah.
Sorry, Emma, I was just jumping in. It's a great question, and I think it is really important to say that in looking at all this, it is looking at it with an investment lens and the best interest of members in mind, in terms of the risks and the opportunities to the portfolio. So, and the risks aren't something that are, 5 or 10 years away. They are happening today. If you look at just what's transpired in this last year and the impact, for example, that the bushfires have had on companies and on insurance companies, for example, or the floods, these risks are transpiring and taking place now in terms of the physical damage, the reputational damage, and the financial damage. And then over the next decade, the transitional issues that companies are going to need to face into, whether that be a drop in demand for fossil fuels. So, for example, overnight, China's literally just said that they would look to possibly put a ban on importing coal. Now, how that transpires, I don't know. But these are real issues that are taking place, particularly with many countries around the globe that have put in the net zero for 2050 targets in place. So how do we actually protect our portfolios, work closely and engage with these companies in how are you going to transition? We all know that this can't happen overnight, but we know that it does need to happen. And so this collective action of investors, companies and the communities putting really strong plans in place to really manage these risks and also look at the opportunities, for me, is exactly what you'd want and investors to do in terms of their fiduciary duty and putting members' interests first and making sure that there are sustainable long-term returns.
Christian, did you want to add to that as well?
Yeah, I think I'd make the observation that if I were to go out and say, look, we're looking at technology disruption and automation through artificial intelligence and so forth, and so we're positioning our portfolio to take advantage of that, and we're looking at how that's going to impact our assets and businesses that are not adapting. It would be uncontroversial. And yet this thematic around climate, including the technology and the legal and the consumer change preferences, is, I think, up there with these sort of disruptions. And yet for some reason people will say, well, I'm not doing my job by looking at that. And so I just fundamentally disagree with that. And the proof is in the outcomes. So I think it's really important. Doing nothing has a consequence. There's an opportunity there. And this is all part of what we need to do as investors, because we are looking forward, not backwards, in terms of how we make decisions. Thank you.
Yeah, I mean, Chris, interesting, particularly for a manager, how you're seeing these trends, climate investment trends, but also some of the broader systemic shifts that we're seeing across the economy playing out in the requests and the demands that you're seeing from your client base. I mean, are you seeing that increasing focus on the need to sort of generate, I guess, carbon risk-adjusted returns playing through in terms of the conversations that you're having with your clients as well?
Yeah, I mean, definitely, Emma. It's been interesting, and I'll comment on the fiduciary duty one as well, and just to reaffirm what both Christian and Deanne said, because it really practical experience right now as we're leading into summer. Ausgrid have been ramping up their bushfire response, or preparation rather, and it's an incredibly increased cost base that they're increasing their cost base that they're dealing with. So again, if you sort of turn a blind eye to severe weather events like a bushfire and so on, you're not acting in the best interests of your investors. You're not being a good fiduciary as well. So there's that, like Deanne said, it's today as well as tomorrow. With regards to our investors and global investors as well, there is a broad spectrum around what they're requiring or requesting. And that's great. You know, we're a broad church, and it means that we need to have a lot of different collaborations and a lot of different conversations. But I think fundamentally, 4 of Australia's top 4 trade partners have all set net zero commitments, and number 5 is the US. So we'll see how they plan out in a few weeks. But the point being is their own markets are adapting globally. The Australian market is adapting to this net zero future. And so the increase in intensity of requests from us to understand how we are managing it as a manager and how our investments on the ground, like that Ausgrid example, are managing it, start to become real, because people want to get that assurity that managers are protecting their investments today and growing them for tomorrow. So the intensity is increasing in terms of data and demand, and making sure we give people comfort that IFM is looking after that in the appropriate way. Thanks.
Yeah, great. Everyone, keep the questions coming through. I am seeing them and picking them up as we go through, so please keep logging your questions as we go through. Initially when we conceived this campaign at the beginning of the year, 2020 was looking very different, although it was, as you mentioned, Chris, in the middle of the bushfires, and so the effects for climate change in Australia were very dramatic. But then, of course, since then we've had COVID, we've had the pandemic, and we've had this sustained and substantial economic disruption that's come from that. I guess I'm keen to hear from the panel as well whether you see the market disruption that's come from COVID changing your attitude or your approach to climate change and climate risk, and also, I guess, on the other side, also looking at what I hesitate to use words opportunities, but how do we kind of align our response with the need to be addressing climate change, particularly as governments begin to consider economic stimulus packages and in terms of the availability of cheaper debt or additional funding, for example. So Deanne, maybe jumping to you in terms of impacts of COVID and response post-COVID in the climate change context.
Yeah, look, I think in terms of sort of coming out of post-COVID, if I think about, does that therefore change the premise of what's occurring from climate change? No, it doesn't. But if anything, it just gives us such an opportunity to really take a good look, reset, and make sure that part of the recovery in terms of the way that the focus is really addressing climate change. We ultimately, as you can see, are needing to pump serious money into the economy, and you're seeing that play out globally. So therefore, in that construct, why would we not want to make sure that that actually isn't just going towards a recovery of an old world, but actually setting us up as a nation with real competitive advantage? So I actually see this as a real opportunity for us to really look at this from a national perspective. And there's a number of organisations that have really done a lot of research into how could you actually really help the economy recovery coming out of COVID-19, but also really green the economy as well. So you might be familiar with the Beyond Zero Emissions, for example, and their 1 million plan, where that actually did a lot of research into the areas, whether it be renewables, construction, affordable housing, that actually really create jobs, really help the economy recovery, but actually make sure that we're resetting it and setting it for the future and giving ourselves a competitive advantage. So I see, if anything, an area to focus on this even more, because it's much more, therefore, future orientated and likely to perform better over the long term.
Christian, obviously a lot of disruption, economic disruption, but also disruption for a lot of people's jobs as well. How is Seabus kind of seeing the impacts of COVID on approach to climate change, and where do you see the post-COVID response in terms of the climate change response as well?
Yeah, look, I think there's a couple of observations. First of all, because of COVID, interest rates are at record lows, and there's likely to be that way for a long period of time. Very different to 2 years ago when we were thinking about interest rates rising. Now, a low interest rate environment is a very conducive environment for us to think about making longer term capital investments rather than sort of seeking short term yield. So it does mean that there's an appetite to invest, and we've been pretty upfront around our desire to be able to look at our investments not only in terms of the returns that they produce, but also the jobs that they can produce along the way. But for us, it's making sure that those investments that we're doing are not just a short-term sugar hit, because we're going to own those assets for a period of time. And so we think that this really opens up a unique opportunity. We've got capacity in the workforce to do things. We've got a desire to create an opportunity in jobs. And we've got investors that are looking at future-proofing their portfolios by investing in companies and technologies and assets that are going to be to stand up to the changing preferences of consumers, and as you mentioned previously, the changing requirements of our trading partners and so forth. And so we see this as an increased opportunity rather than a diminished one. Thank you.
Yeah, sure. And I mean, just to sort of respond as well, we've got quite a few questions that are coming through around some of the specific technical aspects of the campaign. So just to sort of note that more than happy to provide more detail on it, but I would encourage you to also go to the Climate League website to get more information on the mechanics of how we're looking to track the contribution of the supporting signatories to the campaign towards our shared national goal of 230 million tonnes by 2030. And more than happy, of course, to provide some additional information on some of the specific aspects of how we're measuring and tracking action and contribution towards the emission reduction goal. Chris, I guess on that, in terms of the post-COVID response, also keen to hear from your perspective. A lot of the discussion in Australia has focused on, how do we lead on the front foot with the post-COVID recovery? And a lot of that has also focused on the debate around opportunities in energy investment, opportunities in terms of revitalising certain industries, kickstarting the return to work in some of the retail and commercial industries, but also significantly the potential for a gas-led recovery, or the issue around future fossil fuel growth in Australia and how that might work. I mean, given your IFM's just put out a new strategy, I guess I'm also keen to hear your views on where you see what your approach is to dealing with the challenges of carbon-intensive investments like fossil fuel-based investments, but also how you're looking at that in the context of transition and achievement of the net zero goal as well.
Yeah, thanks, Emma. It is challenging, and I'm not going to be able to give you a very concrete answer right today. I'm sure you'll understand that one too. One of the things around gas and fossil fuels as well, and what the work we're really trying to investigate right now, is the range of scenarios that are out there in the marketplace, and what are the expectations of investors in different markets and the use of those scenarios. We had another one come out last night, which was fabulous to see. What they are doing is they're stretching everyone's thinking. When will certain fossil fuels become uneconomic or unviable? In different markets, it'll happen at different times. We have a view that gas is still part of that transition future. It's really about the speed at which it's going to be used. In terms of these led green recovery or build back better, I think it's such an opportunity both for Australia and the world to integrate sustainability principles into it. And I would have, admire the Europeans who actually tied government funding to sustainability outcomes in this COVID period, and perhaps that would be a different way to approach it here in Australia as well. And I think that's a bit of an opportunity that we can still pursue, right? We've still got a lot of state governments out there putting out their budgets and putting in their capital requirements for critical infrastructure across the country as well. So I think there's still that opportunity for us to tie that in. Really, the other element of all the net zero aspects and the building back better type approach that we should be taking, and it shouldn't be lost, is the people element. And that's what I think COVID's really brought to the front of the queue in terms of thinking, is around there's a real human element to COVID, obviously, but also all of our activities. So that's really come back into our thinking in terms of who is using the different investments, who's working at the different investments, how's it impacting local communities as well. So that's actually a real benefit out of COVID. It's really sharpened the interest around human and people-related issues and the combination around planet as well, from my perspective. Thanks, Emma.
What about hydrogen as well, and that as a future opportunity for Australia? I mean, there's a lot of excitement globally around the potential for hydrogen. I mean, how do you see that sitting in the mix for Australia as well over the next 10 years? To Chris.
Yeah, I was hoping you'd guess it was me, but I'd be interested to hear Deanne and Christian's view on this as well. But hydrogen is exceptionally exciting. It is, to a degree, relatively untested as well. And, China is actually already one of the largest producers of hydrogen as well. So it's really interesting seeing some of the economies that we would perceive to be not so friendly with climate actually still testing some of these things and actually pursuing them as well in terms of emissions and so on. I think it will be the next wave of investment in terms of infrastructure investment and making sure that existing infrastructure can utilise new next generation fuels and biofuels and so on. That'll be something that will need to be looked at over the next period, 10 years or so and plus. In terms of specific investments, I'll probably zip up my mouth as well from that perspective, but it's not really my place to say.
Well, Deanne, let me jump to you. I might pack a couple of questions into one. Firstly, just to get your views on the approach to fossil fuels, and other carbon-intensive investments, but also just in terms of, I guess, the hydrogen question as well. Also, just keen to hear if you've got thoughts on that as well.
Fantastic. I think, look, and take a word that Christian said earlier. If I take hydrogen, the optionality, it's so embryonic at the moment, hydrogen, but you absolutely know that over the next decade or 2 decades, it's going to really transform globally. And Australia's in such a unique position that if we get this right, combined with our solar and wind natural assets, that we could be such a superpower. So I think it's incredibly exciting, but it's incredibly nascent at the moment. So I think it's about optionality from that perspective. I think fossil fuels will certainly continue to be important. It's more what you do, and possibly combining that with the sort of the green hydrogen side, for example. So whether it's aluminium, whether it's steel, etc., that will be incredibly important well into over the next couple of decades. From an oil, gas and a coal perspective, that certainly I agree with what Chris was saying in that gas is going to need to be important as we transition. It's just more a matter from an investment perspective. You can see very quickly how things can change, and you just need to look at sort of coal, gas, oil companies over this last year and the valuation of those to see how quickly these things can change. So I think from that perspective, we would certainly be looking at what point in the transition cycle from an investment perspective does it not stack up any longer. At the moment, we think that there's still really good investment, and particularly those that are fueling things like aluminium and steel. But on the other hand, I think you need to make sure that there are clear transition transition plans in place for those companies.
I mean, Deanne, just to sort of extend that out a little bit, I mean, what do you see the risks of a disorderly transition? So, for example, you mentioned the impacts on valuation. If we sort of potter along making incremental changes and then suddenly the market moves sharply to sort of move, rapidly ahead with deep emission reductions in the next 10 years. I mean, what's your view in terms of the risks that might present from an investor perspective as well?
Really significant. And I think to a degree you've seen that play out this year for many of the thermal coal players, for example. So I genuinely think, and certainly this is what I detect from investors, certainly here in Australia, that we want to work with companies on that orderly transition plan. And it does start by, having really good disclosure and really clear targets, and then what's your action plan as we head out to 2030 and then beyond. And what I certainly see is that a number of companies are really engaging with that. They absolutely can see what's coming. And so how do we collectively, and this is what I love about the Climate League 2030, is we are asking for collective action. How do we collectively work towards these goals, and what are the plans in place? Otherwise, we will see value lost so significantly overnight, which is not a great outcome for our members.
Christian, just turning to you as well in terms of impacts of disorderly transition for your members versus benefits of orderly, I guess you could say, transition over the next 10 years. I mean, how is Seabus looking at these risks and opportunities as well?
Yes, I think the first thing I'd just like to make a point on, which relates to the hydrogen discussion, is that when you look at renewable energy, we routinely underestimate the pace of these sort of, the economic disruption, right? And we underestimate that to the extent that, today, renewable energy through wind, mass wind and solar is actually cheaper than any other source of energy. Now, reflecting that, it's also created a problem and an opportunity in our electricity sort of grid, because during the day, in particular, you actually have energy prices that are massively depressed because we've got too much electricity being generated. Now, if you ask the question about hydrogen, you say it's too expensive. Well, only if you think about generating hydrogen in the old world point of view. But imagine if you use those cheap periods of time when you've got more energy than you need to then use it to generate hydrogen, and all of a sudden we've got this mass sort of leap in technology beyond what we originally had. And so it leads to this sort of issue around the discussion around gas as a transition fuel and so forth. We need to be very mindful that these things can change far faster than we expect. And what sort of looked like a transition fuel or a transition industry becomes actually a stranded industry quicker than you think. And so it's really important to think about that in terms of, well, what are the skills that people are trained in one industry, and how can we think about broadening the skill set and retraining? And so this comes down to the transition risks, and I think the best ways at which you can sort of tackle these sort of transition risks is to think very holistically. We do have the ingredients. We've got sort of initiatives now where we're encouraging people to do apprenticeships. Unfortunately, younger people have been most impacted by COVID, but they're the people that are also, most highly able to be trained in new skills. So there's an opportunity there. And we've had, an interesting experience with the disruption in Victoria with the shutdown of coal-fired power stations. If we just looked at it one power station, you've got a whole workforce that's been disrupted. But by looking at it as an industry, one of the really interesting things that unions had done was to actually say, well, are there people in other sort of nearby power stations that are ready to retire that could be willing to accept an earlier retirement to allow the younger people in the industry that's been shut down to have some longevity, knowing that the whole industry as a whole is going to be decommissioned. And so I would encourage us to think, much more holistically. The things that are going on, we talk about, segmented industries, but actually there are interrelated things that are going on, and it does require a more integrated way of thinking about how we transition communities and the workforce and the skills that are required. Thanks.
Okay, great. I'm conscious of time, and I'm also conscious of the fact I know I haven't gotten to all the great questions that have come through. More than happy to follow up on them, but I guess I would just ask the panel at this point to perhaps provide some closing thoughts just on where you really see the benefits of an initiative like Climate League 2030 in assisting you on your climate change journeys, and also just where you see, looking ahead over the next 10 years, where the opportunities are of getting on the front foot and dealing with ambitious climate change goals in terms of Australia's economic development out to 2030. And I might just start with Chris, and then Christian, and then Deanne. So Chris first.
Yeah, thanks, Emma. I think one of the challenges and opportunities quite immediately, and I'll focus on that first because it captures what Deanne and Christian were talking about around the pace of change and the impact on people. And as things change and transition quickly, making sure that we maintain the rights and the opportunities of workers who may lose out on one industry, but making sure that they maintain their level of standards in the new industry. So it's just something that we've been thinking about quite a lot, and making sure that just transition, in the inverted commas, is really captured, because I think it is an opportunity as well, new skills. So on. But coming back to Climate League 2030, and we've touched around this. So you've mentioned a few times around this idea of tracking and reporting. And, it's been in my experience, or our experience as well, around being transparent around our commitments and tracking them on an annual basis or biannual basis, whichever it may be, will actually drive greater accountability and greater outcomes. And so I think that's one of the great aspects of 2030, is that it is measurable, it's transparent, and ultimately it's accountable. And that's partly, it's a little bit daunting not to be backward in coming forward. It is daunting to put your name against something, but it actually will increase and the impact that we can have, and hopefully get Australia ahead of the curve once again that we have been in the past on climate. Thanks, Emma.
Great. Christian.
Yeah, look, I like the fact that it's accessible to pretty much most investors. You don't have to do every single initiative. You can do one or two, and you can increase your ambition over time. And that's sort of how we got to where we are. I think the second point is that we are facing a huge disruption. It's happening, whether it's technology, whether it's legislative, whether it's consumer preferences, and so forth. And again, this initiative encourages investors to become informed about their portfolio, and better informed investors make better decisions. And also it means that capital flows in the correct areas, and rather than in the areas that may face sudden disruption. So this initiative is really important in helping the investors get a better understanding around the change that is happening. It's inevitable, and helping us allocate capital more efficiently. So I'm really encouraging everyone to take a look at it. And you don't have to do everything. You can start anywhere there, and I think it's fantastic in that regard. Thanks.
Thanks, Christian. And Deanne, last closing comments from you.
Thanks, Emma. And I guess I would preface this with saying I am a natural optimist. So, so my comments are probably in that context. In that, I think if we tried to do this about 5 years ago, it probably wouldn't have worked, quite frankly, because I think, as you've heard from Chris and Christian, many of us were actually doing really detailed thinking, observing. But 5 years on now, I think we can absolutely see the risks that our portfolios are exposed to. But I also think so too can the community, and so too are businesses. So right here, right now, I think we're seeing the community and businesses really engage in this. So for me, the Climate League 2030 provides a really good framework for both setting that target, but also just taking practical steps. And the thing I like about it, while we're starting with us as institutional investors and super funds, but really spreading that with banks, insurers, and companies. And for me, really lining up behind the Paris Agreement. At the end of the day, you know, I hate to quote Wizard of Oz, but if you don't know where you're going, any road will take you there. Whereas actually having a really clear target and plan, and then each of us working out practically what can we do to line up behind that and really take action, means that when I think about 2030 then, it brings us that much closer to both being able to reduce emissions by 45%, which ultimately, let's say, why are we doing that? Not to have catastrophic impact to our environment, our economy, and our community, and ultimately our investment returns. But also importantly, I think it really places Australia, if we can all line up behind it, in much better position to be that superpower that we have the potential to be, quite frankly, in area like renewables and hydrogen. So I'm very optimistic about where we as a nation are at the moment and the potential that we've got. But I think it's much better that we line up behind common goals rather than disparate action.
Yeah, great. Look, and thank you so much for all of those thoughts, observations and insights. I think there's some really interesting actions that all of you are taking, some really interesting insights around where we're going to go over the next 10 years. So again, thank you very much for joining. Well, all that's left for me to do now is to draw the event to a close. I'd like to start by thanking our panel participants, Deanne, Christian and Chris, for a fantastic discussion on the challenges and the opportunities involved in tackling climate change in Australia. I would also like to acknowledge the role that their organisations, Aware Super, Seabus Super and IFM Investors, as well as Queensland Investment Corporation, are playing as foundational supporters of the Climate League 2030. And I'd like to also acknowledge all of the organisations who've joined Climate League 2030 as supporters, and I look forward to seeing the actions that they take to support our shared goal of reducing emissions by at least 230 million tonnes by 2030. And I encourage you to take some time to visit our website, www.climateleague.org.au, to learn more about the initiative, to read about the actions being taken by participants, and importantly, to find out how you and your organisation can join and get involved. So we're really proud to be starting where we are today, but over the next year, we want to make Climate League bigger and better, bringing on new partners and new participants from right across the financial system and across the corporate sector. So I'd like to personally acknowledge our event partner Synergy Effect, who've made this event today possible. And finally, I'd also like to really personally thank the IGCC team for all of their hard work in developing Climate League 2030 and getting us to this point today. And especially I'd like to acknowledge Tom Arup, the IGCC Director of Strategic Communications, and Madeline Hill, our Manager, Investor Initiatives, for their leadership and huge contribution. So thank you all for joining us.